Hey everyone, my name's PK. Here I am in Mexico City. We're on holiday and we're staying at this leg of the trip, we're staying at the Four Seasons, and right behind me is this kind of water fountain with like flames coming out of it. So I thought this would be a really cool area as I aimlessly walk around the water fountain slash flame areas, just so there's a good light on me to talk about the 4 mistakes that property investors are making right now. It's kind of a picturesque scene, really nice time to be in Mexico City, and my family's back at the hotel room, so I thought let me quickly sneak in a video if that's okay. All right, so the first mistake that property investors are making right now is actually thinking that there's another boom on the way. You know, a lot of people have missed out on the last property boom, maybe the property boom before the COVID property boom, maybe the boom before the 2014, 2017 property boom, and you're like, I don't want to miss out again. I just want to get in because right now prices are rising everywhere. Okay, and that is such a big mistake because that means that you're making a long-term decision based on a short-term emotion. My view based on the data is that there's no property boom coming. That doesn't mean all places aren't going to continue to rise, but I don't think any or many places will continue to rise at a city level by 20% next year or 30% next year. So if you're sort of thinking, I don't want to miss out, let me just hire a buyer's agent, let me just do a course, let me just buy anything without any education, without any professional help, just kind of think twice about that, right? It might not be the best idea. That's honestly my honest opinion. The second mistake that I feel that property investors are making right now is they are investing in locations that have grown too much already. Okay, there's so many locations around Australia, like places like Brisbane, Adelaide, which are still hot spots, quote unquote, but they've already grown by like 70%. And a lot of these property investors are like, well, they've gone up so much in the last boom. Sure, there's been a bit of a dip, a correction, but they've gone up so much that means that they must continue to go up. Okay, and that's really a rookie error. You know, the biggest limitation on future growth is past growth, because there's only so much that in the short term a suburb can sustain, because at some point it becomes really unaffordable for the local population to afford that property price as it goes up in the short term. So please, when you're buying a property, try to make sure that it's not, hasn't gone up by 70%, 80%, sometimes even 90% in the last 3 years, 4 years. Try to buy something that has gone up less, significantly less than that. That's a really important metric that I don't think anyone talks about, much less professionals, because they're like, well, we're making bank, let's just get people into these suburbs that they think is good and it's an easy sell, right? Because it's rising right now. That's the second mistake. The third mistake that I think people are making right now, and I saw this on the Facebook group, that I run, Australian Property Mastery with PK, is people are like, well, now property prices can't sustainably grow because they've already boomed so many times, and the divide between wage growth and house price growth has become so decoupled that at some point there has to be a massive crash. And my retort or my conclusion based on the data is that wages and property prices, at least in Australia, never had any correlation. If you look at the newspapers from back in the 1980s, the 1990s, 2000s, this was always in the paper: unaffordability, wages not keeping up with house prices, etc. And so you might think, well, how can they continue to do that? Like, that seems really weird, right? Well, the reason house prices can continue to go up despite wages not keeping pace is because of fiat currency. Okay, our currency in these days is not really pegged to anything meaningful like gold. Okay, so every time there's an economic downturn, there's money printing, there's more M1, M2, there's more money supply put in by the central banks, by the governments, and because of that, more currency in the system, there's what we call currency debasement. Okay, currency debasement, which means what you had yesterday is worth less tomorrow. Every dollar that you have is eroding. Okay, it's eroding, it's going away. Just like I went to this amazing museum called the Temple Mayor Museum. It was basically a museum depicting the ancient Aztec civilization and how it basically eroded with the Spanish coming on and the conquistadors and them sort of taking over everything. That's happening to our currency ever since the 1970s, 80s. So what you find is that in this, especially in the Western, sort of capitalistic democracies, it's a debt-fueled economy, currency debasement, fiat currency, and also inflation, along with this sort of constant appetite for increased and more debt, means that house prices, being a hard asset, something that everyone always wants, continue to go up. And it's really causing inequality. Those who can afford them and have them, they are the ones who prosper. Those who don't have them, it becomes further and further out of reach. But that doesn't mean that house prices ever go down, because right now, this is getting a bit technical for being on holiday right now, but right now in Australia, what we have is not a normal distribution curve in terms of equality, in terms of there's some people poor, some people rich, most people in the middle class. Right now it's upside down. Okay, not saying most people, a lot of people are rich more than ever before. A lot of people are poor more than ever before, and the middle class is shrinking. So there's always enough demand for properties because there's so much on the top end, there's so much affluence, there's so much money flowing around, circulating the economy, that the average house price does not correlate anymore with the average income, because the average income doesn't go up, yet there's so much, right skewed or top skewed wealth that keeps increasing and increasing in Australia. I mean, the number of millionaires keeps compounding every year, every decade by a huge margin. So that's the third reason, or the third mistake, that property investors, especially if they're new, are making right now. They're like, okay, property prices can't do what they did for the last 30 years. I could be completely wrong, but based on the last 30 years and this conversation being had every single year, basically house prices can continue to go up. And that's what we're seeing in places like New York, not so much Hong Kong anymore, but London, other places around the world where you have this inverse normal distribution curve. And the fourth fourth mistake that investors are making, or potential investors are making, is that they're thinking, oh, well, house prices are completely out of reach for me now because they've doubled and they've boomed again and again. The COVID fueled boom. It's just like, how am I going to invest? I can't even afford anything. And really the solution to that is to look beyond your backyard. You might be in Sydney, you might be in Melbourne, and you might be thinking, hey, look, yeah, completely out of reach for me. But it's not out of reach, because you can buy places in parts of South Australia, you can buy places in parts of Brisbane, you can buy places in a lot of parts of Perth, and and not in boom bust economies. You can buy in hundreds of suburbs right now for under $500,000, for under $600,000, for under $700,000. So don't think it's out of reach. Don't put it to the sideline. Don't think real estate investing is an archaic investment strategy for financial freedom in Australia just because property prices have gone up so much. They have, but there's always ones that were, 200,000 that are now 300,000, that were 300,000 that are now 400,000. Try to find those affordable properties. They are definitely existing right now. I just did a loop for no apparent reason. My arms are hurting a little bit now. It's about 7 p.m. We just had a great couple of days. We stayed at a place called Las Estacas, which is like a meditation retreat. We did that on the weekend. I think it's about 3 hours Yes, 3 hours south of Mexico City. That was so beautiful. It's like a beautiful river that's about 5-10 meters deep, and you can actually see to the bottom of the water of the river because it's so crystal clear, and it was just amazing. And we're here for the next week. So sorry I'm not posting so much content, so much videos lately. That's because we're on holidays. We go on holidays every term break for my son. So yeah, those are the 4 mistakes. Thanks for tuning in. Hopefully that brought you some value, and let me know if you did. I'll try to do another video while on holiday. Thanks guys, my name's PK. Take care, bye.